It's been a long time in coming, but it looks quite likely next week that the Federal Reserve raises interest rates. It'll be the second quarter-point increase in the current recovery. The real question, however, is what comes afterwards. Financial markets have been anticipating big changes in tax and spending policy when the Trump administration takes over. And this would have important implications for the Federal Reserve as it tries to keep the US economy on an even keel.
Clearly the markets are expecting some kind of fiscal stimulus, and that's been pushing long-term bond yields up and pushing the dollar up. And I think clearly the markets expect that. And I'm sure many of them expect that in the FOMC. But the question is, would they condition policy or even their policy forecast on that until it happens? I suspect many of them will not want to do that yet.
What makes this meeting unusual is the fact that we have a new administration coming into power in 2017. Donald Trump and the congressional Republicans have big plans when it comes to tax policy. This could impact the economy and therefore the Federal Reserve, making policy look quite uncertain, 2017 and beyond.
Well, there are a lot of moving parts as we move from a Democratic president to a Republican president, particularly a Republican president with a Republican Congress. Lots of different types of policies could change. You cited the global trade issue, or the U.S. trade, and the threat of protectionism itself might have an adverse impact on potential GDP, but of very unknown magnitude, and might, depending on the form it took, for example, tariffs, might put upward pressure on domestic prices. But no one knows how that's going to play out, and if I were making a projection today, I wouldn't include that.
A big fiscal stimulus would be a game changer not only for the US economy, but also for the Federal Reserve, which would be forced to tighten pace at a less glacial pace than it's recently been adopting. This could prove to be one of the big stories in central banking in 2017 and beyond. Sam Fleming, Financial Times, Washington, D.C.